Welcome to another edition of Regulatory Ramblings. On May 23rd, Hong Kong's capital markets watchdog, the Securities and Futures Commission, released its consultation conclusions regarding the territory's new virtual asset rules framework. The new regulatory regime went into effect on June 1st, and much of the fanfare surrounding it stemmed from the notion that now retail investors in the SAR will be able to purchase cryptocurrencies and digital assets writ large from licensed exchanges. Clearly, Hong Kong is positioning itself to become a cryptocurrency hub, and with the start of applications for licenses to run trading platforms and exchanges in the offing, it's something to keep an eye on. Trading in cryptocurrencies in the city has been restricted to institutional investors and other professionals since 2018, but with Hong Kong's new regulations allowing retail trading, that could happen as soon as the second half of 2023. Local officials have stated that the initiative to welcome crypto is backed by safeguards for investors. The move comes amidst a background of tough regulatory headwinds for the sector. Our guest today will hopefully be able to shed some light on what it all portends. Vince Turcotte is based in Hong Kong and is the APAC Director for Digital Assets at Eventus, a global provider of trade surveillance and market risk solutions for multiple asset classes, including equities, options, futures, forex, fixed income, and of course, digital assets. We're also joined by his colleague in London, Jonathan Dixon, who is Eventus's Director for Regulatory Affairs, covering Europe, the Middle East, and Africa. Jonathan's well-versed in regulatory systems of the EU and is an expert on trade surveillance. And with that, gentlemen, thank you for joining us.
Thank you very much for inviting us.
Okay.
Pleasure to be here.
Pleasure to have you. Vince, when we've spoken on this in the past, you've said that the SFC has done well and they've been pragmatic in terms of taking a bottom-up rather than top-down approach, say, as Singapore's done, and they've actually listened to the industry. So, I mean, clearly this is an important milestone for not just Hong Kong, but for the region in terms of retail access to digital assets. What are your thoughts?
Well, absolutely. I mean, retail has been trading digital assets, I think, since virtual assets, since they were available. I mean, it's been the backbone of the market. The real difference is that there hasn't been a regulatory structure to protect them the same way that there is in banking or in securities law. And what we're seeing with this move is, I think, a very intentional, well-calculated and planned attempt to bring virtual assets into the regulatory tent. In this joint approach between the SFC and the HKMA was, of course, enabled by the AML ordinance and the amendments made there too last year. And they've really been a case study in working in lockstep to formulate pragmatic regulations that will allow for regulation of the space, retail participation, and at the same time not choke I think the technical developments, the development of the technology that's been so important to the space.
Yeah, no, that's an important point, that previously people did trade in crypto, but as far back as I think 2016, 2017, the HKMA, our central bank and banking regulator, basically said we don't regard them as digital currency. They're digital commodities, they're digital assets, and you trade them at your own peril. And that's been their position for the longest time. I'd like to turn to Jonathan. How would you compare Hong Kong's approach to digital asset regulation to that of Europe and the US?
I would say that when we look at Europe and we look at Hong Kong, there are more similarities than there are differences. I think the requirement to have authorization for VASPs or for exchanges is a big similarity. I think the requirement to have trade surveillance in place and AML processes in place are also big similarities. And I think the overall focus on protecting retail is, again, a massive similarity. I think where there's a real benefit to retail and a real benefit to firms operating in this space is having a degree of certainty. I think where we look at the US, we see regulation via enforcement. and we see a lack of certainty. And it's that lack of certainty that means that we're not sure where the protection could lie for investors, if it lies at all. We also see that we're not seeing certainty for firms that are investing there and firms that are placed there. All we need to do is look at some of the major crypto exchanges that are in the US saying, well, we might consider moving to Europe, we might consider moving elsewhere, to see that risk inherent in how they operate. I would say the UK is in an in-between place. I know we're not technically part of Europe anymore, but we are close enough to our brethren to be able to have some similarities. The HMT consultation paper that was initially released, I think, was very positive. I think it tried to leverage some of the stuff that had gone on with MiCA. I think some of the information that's come out from Parliament committees afterwards has been a bit worrying when they likened trading digital assets to gambling. I don't think that will gain any traction personally, but I think it's a little bit of a concern. I would say Europe and Hong Kong are probably in the strongest places when it comes to certainty and regulation. Okay. Great Britain second, and America, I think, with regulation via enforcement lagging a little bit behind.
Okay, let's talk about MiCA, because that's certainly something a lot of people locally are talking about. I mean, specifically, how do the VATP rules in Hong Kong, the virtual asset trading platform rules, compared to those in Europe? Because my sense is that people in Europe are grumbling. They're saying this is going to kill the industry, or is that overstating the case?
I wouldn't say people are grumbling and saying it's going to kill the industry. I think what it might do is consolidate the industry a little bit. But as I've always said, if you can't afford to have AML processes in place, if you can't afford to use a third-party vendor or create your own system to deal with trade surveillance, then you probably can't afford to be in business. And I think the grumblings might be from less developed and less secure and less mature VASPs. But ultimately, if you deal with client money, you have to be in a position to protect that client money.
That's exactly right. Not to cut you off, but this is a point that I think we've addressed quite a lot recently, is that in order to draw the larger share of assets into this, and so make it available to institutional investors, to asset managers, to people who have investment mandates that are protective of shareholders, protective of users of their products, you have to have a regulatory structure. And so I think the short-term pain that some of the immature VASPs that Jonathan is referring to will give way to a much longer term and more beneficial future for the industry as a whole. And there's still this theme of convergence going on too. Don't forget that we're not just talking about the existing world of virtual asset platforms. There is the whole world of traditional investment banking and asset management that is looking to get into the space as well. Particularly here in Hong Kong, we have a couple of prominent examples of large securities firms that have positioned themselves now to take part in this market, exposing their account base to virtual assets under these new regulations. And they are traditionally stock, bond, futures, and foreign exchange powerhouses. So that convergence is also important to consider when you're looking at, this smaller group of say, more dyed-in-the-wool Satoshyites, maybe, to the larger world of financial infrastructure in general.
If we look at the SFC, I mean, bringing this more back to Hong Kong, I mean, it's the first and only regulator to require market surveillance. Do you think other regulators will follow their lead and begin requiring surveillance as well?
Yeah, well, sure. The IOSCO guidelines that came out, help me out, Jonathan, was a week or 2 weeks ago, specified within them that surveillance was something that they were looking at. Singapore, in their market consultation last November, brought it out as well. Said we want to have. We directly asked the question: should we mandate market surveillance? Japan, the JVCEA, which is a large industry association that is working hand in hand with the regulator, has said more broadly measures of to ensure market integrity. just as just as Japan has done through the JSDA, the Japan Security Dealers Association. Those are the industry associations that work with the regulators to ensure a common standard. So while Hong Kong is the first one in my knowledge, and perhaps Jonathan can help us here, but in first one in my knowledge to actually codify it and say, you need to have a market surveillance provider. You need to provide at least annual reviews with the regulator to ensure that those standards are being met, and so on. I mean, John, what do you think? Have you heard of it really anywhere else in digital?
Yeah, I have done. So you're right to touch on Japan. So the JFSA have required surveillance for exchanges operating out of Japan. It's something that they have required. I would say it's more of a light touch about having some rules in place. Japan has an interesting way of dealing with potential malfeasance. I would say that it's a little bit less rigorous and a bit more client friendly, in that you write to your clients, you explain why you think they've done something wrong, you ask them not to do it again, please, and then if they do it again, maybe there'll be enforcement. I think that's a cultural way of approaching trade surveillance and addressing malfeasance, which I totally understand. But I do think the approach that we've seen with Hong Kong is a lot more traditional. And I also think long-term will enforce client protection, in that there will be, hopefully, proactive ways of dealing with any malfeasance. It's also worth stating that, as obvious as it is, invariably AML and trade surveillance are always retrospective, that you are looking for events that have already occurred. So as great as it is that we're seeing it, I think it's about building up that cultural base of ensuring that clients know there are those protections in place. It's very hard, not impossible, it's very hard to stop someone from insider dealing. It's very hard to stop someone from ramping or spoofing or layering without understanding there are these enforcement rules that sit behind the trading activity or sit behind the exchanges. So I think publicizing what you're doing, explaining why you're doing it, and engaging with the public to make sure they're aware of these changes will be vital as well.
So if we take a holistic approach, looking at it holistically, I mean, what are the potential pitfalls that service providers, investors, and others may face in complying with the SFC's VATP rules? Vince?
What are the hurdles you mean?
Yeah.
I think, I think apart from managing expectations, between the regulator and the VATP community, there's the question of burn rate. I mean, exchanges there's one group of exchanges who really rushed to make sure that their applications were in by June 1st.
Correct.
So the qualifications for setting up involved, having a premises here, having the appropriate staffing, having systems in place, or at least, systems that they could demonstrate were being onboarded, and having their policies and procedures pretty well laid out. Now, the gap between, and that would allow them to operate theoretically during the grandfather period. It's about 1 year that they'll have for that to happen. I'm not certain that, that 1 year runway is going to really satisfy a lot of people. There's another group of exchanges that have said, we're going to spend this year researching it, not being first movers, but being set up as we go along. So there's that group of guys is sort of waiting for the June 2024 to see how things have panned out without making a significant an investment as the guys who rush to get to June 1st. So this year, I think that's a hurdle. I think staffing is certainly proving to be a hurdle.
In terms of finding qualified crypto staff? Because I mean,
yeah. Well, don't tell John, but surveillance officers are very much in demand out here.
I'm sorry to interject, Vince. I would say that you're right, but I would say two things. A, you are right. The most treasured possession beyond having an excellent vendor like Eventus or VATP is having good staff. And the reason for that is once they understand your systems, understand your internal processes, understand trade surveillance, they are very difficult to replace. And I say that as an ex-head of surveillance for a crypto exchange. I would say, though, that ultimately, as much as we can get into the weeds and go, well, spoofing is not always spoofing, layering is not always layering, there are distinctions between what people argue they are. Ultimately, VATP's procedure is VATP's procedure. What we're training, or people will train to look at, is what they train to look at. If you are, sorry, Ed, but
yeah, go ahead, please. Yeah, go ahead.
If you are working for an investment bank and you move over to digital assets, yes, you're learning a new asset. You're not learning a new typology or a new procedure. So
precisely, the skills are not new. The arena might be new, but here's the catch, though. Now, some might say crypto is not that old. It's 2009 to now. I mean, it's a teenager. By the same token, it is still a relatively new asset class. There aren't that many professionals in it per se. And yet, when you look at the recruitment in this space, it's like everyone wants a 30-year-old with 20 years of experience.
Yeah, no, you are right. People do want it. They're not going to get it, but they do want it. I mean, I think what people want, and what I always wanted when I interviewed, was one of three things. I want, at a junior level, not at a senior level where you expect more, but at a junior level, I want either digital asset experience,
right.
I want a lot of enthusiasm, or I want some trade surveillance experience.
Mm-hmm.
And if you're bright and have a lot of enthusiasm, you can learn the other things. If you have digital asset experience, well, you know what it is you're looking at. And if you've got trade surveillance experience, well, you can transpose that to the new asset class that we're looking at.
Oh, I agree completely. And people will often raise the issue of, well, you don't have enough experience in this field, in this type, in this category. I mean, the former head of the SFC in Hong Kong, Julia Lung, was a former journalist. Lloyd Blankfein, the former head of Goldman Sachs, was an English literature major. You know what I'm saying? I mean, people will, so they'll say, well, you don't have a financial background. You want to go into compliance. You've never worked at a financial institution, and yet you'll find even glaring examples of that institution of people in roles like or similar to the ones you're interested in, that came from backgrounds similar to yours, but they didn't face that level of scrutiny or flag. So, do you know what I'm saying? I mean, recruiters being very selective about what bars to entry they think are relevant to raise, depending on the candidate. And I'll say this: it does seem to me, if you're from an upper echelon institution, the view is it's okay. If your law degree is from a top 14 school in the U.S., you can go into investment banking. If not, they'll query you a little more. Why do you want to go into investment banking? If you can be an English literature major from an Ivy League school and go to Goldman, but if you're not from an upper echelon institution, they'll scrutinize you more. I mean.
Well, okay. I mean, I think there's a couple different points there. Number one, I was an English literature major, so. But number two, what I would say is that you're also asking for people to cross the bridge from, let's say, an established investment management firm or investment bank into a startup. People who are in a position where they have a burn rate to worry about, they have funding rounds they have to go through, and so on. Now, that being said, two people who I know quite well in the industry are Legacy Goldman and Legacy Jane Street and firms like that, where they've had training in a very intensive trading background with lots of technical qualities to it, and they've made that leap across to virtual assets. I would say that now at this point in the development cycle, and this is just speaking from current experience in the market, that getting that same guy to jump from one of the big investment banks where he's got a good job, a steady job, making decent money, leaning on maybe making MD or executive director in the next cycle, getting him to move across is a little harder than it was, say, 4, 5, 6 years ago, when the market was on fire. There was a lot of intensity in terms of everybody's building. Now we're starting to come to that point in the ecosystem where, yes, people are still building, but they're exercising a great deal more caution when they're moving into new markets, particularly when there's a risk that, they might not get that license. You mentioned barriers. One of the things that's interesting here in Hong Kong, and this applies to some of the fairly well-established exchanges that have a track record, is that fit and proper requirement. Is there any scandal on your rap sheet? Is there anything that not you as an individual, but your firm is still pending in terms of arbitration, or in terms of lawsuits, things like that are going on in the background, and that may be a hurdle. We don't know how stringently SFC is going to treat that. I do know from prior experience in the securities world that SFC will take a pretty dim view of individuals who have any sort of smudge on the record getting into a new environment like this, particularly, and again, this is my perception, particularly in what is now looking like a fairly high risk environment. They don't want to make a mistake by authorizing a platform and then having that platform have a really bad actor at it, or having it go bust 6 months after it gets its license. They're being very cautious.
We've got the city's got a reputation to maintain. But Jonathan, I'm curious about what you do, regulatory affairs, because when one sees these types of roles crop up in Hong Kong and in Singapore, I mean, they come under various guises: regulatory affairs, regulatory relations, public affairs, that sort of thing. And the sense is maybe it's not hardcore compliance, but it's compliance related duties that the hardcore compliance people don't necessarily have the time to do, but it's about maintaining the relationship with the regulator, which is important. So schmoozing with the regulators, outside counsel, in-house counsel, making sure the marketing and sales people know enough about the regs, not run afoul of the rules, running training sessions, keeping the manuals updated, that sort of thing. And frankly, it does seem as though that, and I don't say this in a disparaging way, but such roles are often deemed soft compliance or policy oriented. What I've seen people transition or segue from, say, a career in marketing at a bank into a regulatory affairs, regulatory relations, public affairs type role, and use that as their springboard to get into hardcore compliance. Is any of what I'm saying hitting the mark, or is it different in London? I mean, give me your senses.
Yeah, sure. So before we do, I'm going to quickly touch on some of the stuff you and Vince were talking about before. She speaks obviously fluent Mandarin and the Chinese dominated languages. She speaks fluent Japanese, and she had to leave her role because she spent a lot of time in London. She qualified as a lawyer as well, and she wanted to spend some more time with her family. So I think she's actually available and searching. So if you know of anyone in Hong Kong searching for a well-educated Japanese-speaking, Mandarin-speaking trade defense senior associate, I know an excellent candidate. So I know we're talking about
send her CV. I get asked literally every day if I know somebody in the market. So
I'm going to do that. Sorry,
we'll pick this up offline.
I'm so sorry. I couldn't resist being able to get in. But back to your question. So do I think it's soft compliance? I can't answer as to what reg affairs people do at different companies. That's not something I would ever be able to answer.
But you do interact with the regulate. You do interact with the regulators and preserve that relationship.
Yes and no. So with the HMT consultation paper that was released in the UK, I have worked with industry bodies to provide feedback on it, to interact in a secondary basis with the government. I don't directly reach out to HMT.
Sounds more like lobbying.
Lobbying is different in the UK than it would be from a US perspective. It's a lot. So it's not as if I work and I schmooze with MPs and I take them out for lunch and I get them to follow a bill that I want to be released. It works very differently in the UK than it would do in the US. I would say that I have interacted with the FCA. I can't say in what context, but there are communications that are ongoing, as there always are between the regulators and vendors. And I would say that we are proactive in making sure that there are fair and secure and transparent processes in place when it comes to surveillance in general. I don't think it's compliance light. I work with making sure our clients get the best solution possible. They get a solution that's tailored to what they need, what they want, that meets the regulatory requirements that they might have in the jurisdictions in which they operate. I would say that Eventus have hired people as Director of Reg Affairs that come from either a regulatory background, that come from a legal background, that come from a head of surveillance background, like myself. So we all come from slightly different tangents, but we all come from senior positions in the industry. So we really know what we're talking about. I think that's probably where we add more value than most, and that we're not someone that was in marketing that's now in Reg Affairs, is very good at talking, but doesn't understand what they're saying quite as much. And hopefully from the conversations we've had, you get a feeling that I do understand what I'm talking about more than someone that has just worked in marketing for 14 years.
No complaints so far.
I would I'd echo all of that and add that we do have, like, for instance, in the United States, one of our Reg Affairs team engages with people in Washington on a regular basis. We've provided support to the various regulators there. In Asia, in a less direct way, I have direct contact with some of the regulators out here. We're certainly bringing Jonathan into that loop. And we've also sat on some of the committees, as Jonathan mentioned, that work to form responses to the market inquiries that the regulators do. So in the last year in the SFC and HKMA market inquiry, I was involved in that. I was involved in the one for the MAS. And it's really, our role there is, to focus on things that we are really, a big part of, like market integrity, the broader topic of, how should a market conduct itself. And so in that area, we can add a lot of value and work with chief compliance officers, legal counsel, people who, are very well versed in different areas of it. And then we can help them form the response, inputting what we believe to be the way to approach the market integrity question. The other thing I would say, and again to echo something that Jonathan mentioned, is that what we sort of pride ourselves on is direct engagement with the clients. So we don't just give them a piece of software and walk away. We spend quite a lot of time consulting with them through the process of setting up their system, getting it up and running, making sure that they have everything that they need to approach their workflow and to interact with the regulators themselves in terms of reports and that sort of thing. And that's an ongoing thing. The system, and we say this every time we demonstrate it to someone, the system has really been developed in conjunction with our clients. They have asked us to do certain things, to provide a different perspective in reporting, to provide a different alert that would tip off some sort of market manipulation. And we've tweaked and honed and and designed product that fits each of their needs, and then returned it to the community. Brought it into the broader community of clients, so that when you open up the back end of the system, you'll see something like 200 prepared reports that were all really basically designed at the request of a client. And then those can be customized to new clients' needs. So this is really sort of an organic relationship that we have with clients. And we're quite proud of that because we don't see anybody else in the market interacting on that basis in our space.
Well,
sorry to put my salesman's hat on. It's a reflex.
Yeah, that's a point worth noting. I mean, to bring it back to the regulatory affairs question, such roles are really popular. They may appear and they vanish just as quickly. A prerequisite often tends to be that the person who had a financial services background, and because I want to know, do you understand the products? Do you understand the clients? And the third, which is unspoken but equally important, do you know how to navigate the politics in a financial institution, which are all important. But one fellow I know, I mean, he had a law degree. He went into consulting at one of the big four. They hired him for a regulatory affairs role, and much of his day revolves around keeping abreast of the news and writing memos to legal and others that he answers to in terms of, these are pieces of legislation you need to keep an eye out for. These are the looming threats. And that's what they do. I mean, and certainly does he get paid as much as someone in compliance? Probably not, but he is handsomely recompensed for what is essentially a support or an addendum to an oversight role, which is compliance. So, yeah, that caught my eye.
Well, there's the other aspect of this is that, so I come from a markets background, as do a lot of the people in the firm, and so I was someone who was a consumer of the information that was developed by systems such as ours, as well as other products in the compliance area. And I'm, as a responsible officer in Hong Kong, or I have a similar position in Japan, I've had a similar position in Singapore, and I've been a regional head of these businesses as well. We're the ones that have to go get shouted at by the regulators. I didn't go into the JFSA audit with my surveillance guy. I did go in with a lawyer, but they, when the issues around surveillance came up, they ask us the question, because ultimately we're the ones that are responsible for representing the firm. And this is true in each of the jurisdictions out here. I've not had those senior roles in other areas, but maybe Jonathan could speak to that. But it's a point that having these backgrounds, whether we were direct consumers of the system, users of a similar system, or people that had to face off against the regulators, we all come to this with a different body of knowledge and a different empathy for clients that are facing these same situations.
I echo what Vince said. It's also worth noting that whilst we do come from different backgrounds, also these different roles, the roles in different institutions mean different things. So you are right, a lot of my time is spent writing articles, understanding the current environment, but a lot of my time is spent, I wouldn't say supporting Vince. Vince doesn't need much support when it comes to selling. But it also, a little bit.
More than I
but when it comes to supporting the clients that Vince is working with, and when you hire someone like me, you're not paying me for my articles. What you're really doing is paying me for the depth of industry knowledge that I come with. And I'm not going to get on the recompense and everything else. I don't think that's entirely relevant for the conversation. But I would say that I am treated as a senior member of the team based upon the experience that I have. And I think that means that I have buy-in to the firm have buy-in to me. And I think it's based upon the experience that we come with and the input that we can give to both clients and internal processes. And you mentioned about making sure our playbooks are up to date, making sure that we're aware of the current regulatory headwinds. And that's something you only get with experience. And whilst you are right that there might be people that come from marketing and come from different backgrounds, and they can do the job, can they do the job as well as someone that's been in the weeds, that understands the industry? And I can talk about the JFSA, I can talk about the FCA, and yeah.
No, I would never mean to give such a role short shrift, but what I said was this guy spends much of his time surveying regulatory news. So he's reading Thomson Reuters, Refinitiv, Bloomberg, the FT, and based on that, he compiles his memos. He writes memos and sends them to select individuals on particular teams, and that's his role. And it's not what I think of as traditional compliance, but he serves a purpose. And he is a respected member of the team, and his the level of recompense gives you some indication of where he is in the hierarchy. And it's nothing to scoff at. It is a handsome living that he makes. So there are plenty of lawyers that don't make as much as he does, but I don't want to belabor that point. Are digital exchanges and other platform providers starting from a position of strength and preparedness generally? Because something I wanted to bring up earlier was there are a lot of stragglers. Yes, I mean, there is that 1 year period, but there are a lot of stragglers, and it may make more sense to use the next year to test the waters and come to grips with the situation rather than say, okay, within this period, we'll be licensed and ready to go.
Yeah, well, that's an interesting point because there are different strengths amongst each of these guys. You know, you may find that one particularly well-established exchange that I'm well aware of is holding off a little bit on Hong Kong because they don't see their business model as lending itself to the highly liquid coins. They want to be they consider themselves the Amazon of digital assets. And they want to come into an environment where they're more confident that they can lean on that as their strength. They're pretty strong as a firm. I mean, they're a global brand name. There are others that are very well capitalized, and they're coming in. They have a feeling of a little bit less to lose than some of their peers because they have a really well established business. And Hong Kong for them is just another venue, and so it's something that they'll come in, they'll work on getting the license. They may have the application in already, but their runway is much longer, and they can afford to not be 100% right. And then there's a whole another group of firms that are really just setting up their first presence here in Hong Kong. To me, they're very interesting because a handful of them, and we know a couple of them. We're working with a couple of them that they're coming from different backgrounds, just like when digital assets began to take off, you had firms that were established by engineers. Some guy had maybe bought Bitcoin at $10 or $20, and suddenly he looks like a genius because he's rich, and he's going to say, "Well, I'm going to set up an exchange," But his background is not in financial markets. So each of these different strengths is there. The guys who are coming from, I think, the weaker positions. I'd have to say that just shooting from the hip, there are guys that are marginal in their application. That they may or may not get their application here because of one of the factors that we talked about earlier, which is the fit and proper guidelines. That's the weakest position that you can have.
When I think about
go, please, Jonathan.
I was just going to say that I think this really goes back into what I was saying earlier, in that you'll probably find a consolidation of some of those slightly less mature players, to put it nicely, and they will either get bought out, fade away, because if you can't afford to do surveillance, you can't afford to do AML, you just can't afford to do business. And I think it's going to be a mindset change.
No, I concur. When I think about the startups, though, it seems to me the ones that are, and this may be counterintuitive or maybe not, maybe the finance guys know how to present themselves and sell. They've got charisma. You have to in that line of work. But it seems to me the firms led by finance guys seem to be doing better than the ones led by techies. Or is that just my experience?
Vince has more touch points with exchanges than I do, by the nature of his role and how long he's been in it. But from my perspective, I think the best firms have a combination of both. I can talk about where I used to work and say that the two founding members are a combination of an incredibly clever, two very clever, but one exceptionally clever tech guy who wrote all the back-end code for the exchange, and one very, very, very charismatic guy who really understood crypto and digital assets and was a great voice for it.
So he was more of a big picture guy.
Well, it sounds like a Jobs and Wozniak thing,
Exactly.
It's interesting, and it's a very good point. A lot of these startup platforms, I should point out, are investments that are being made by some pretty well-heeled organizations. There's one I can think of in particular that is there's a Chinese Web3/DLT company that does nothing but technology, but they've recognized the opportunity in this space, and they have plenty of smart young kids that they threw at this. And I have a lot of confidence in them. Now, they're looking at this as an investment that diversifies a broader portfolio of DLT investment, of things that they do that are tangent to the space. And one option, I was speaking to the CEO, one option they have is that, well, we'll get it set up, we'll see how it works. And if we find somebody who wants to buy the platform, after it's set up, then perhaps we can do that. So they're looking at it as an investment rather than, something where they're pushing all their chips across the table and saying we're all in on digital. And I think there are a couple of family offices that are sponsoring these platforms as well, similar platforms with a similar sort of mindset. So it's, the barrier to entry, you should, and this is one of the things that's always sort of interested me about this particular space, is that the barrier to entry is actually fairly low. If you have an understanding of the technology, you do not have to be capitalized like JP Morgan in order to get into this. And we saw in the early days of crypto, people setting them up as quickly as an FX broker. You just hang out a shingle and you say, I'm an FX broker, and there you go. And it was, of course, a little more complex than that, but it didn't take a whole lot. Whereas setting up a securities exchange, for instance, or setting up a futures exchange required a lot more capital and much higher hurdles. So these are the guys, coming back to what Jonathan was saying, that are being swept into these amalgamations. And I think it's also a really cool phenomenon to watch. That there's one very familiar name here in Hong Kong that got smart early on and did two things. They said that, first of all, we're going to follow the opt-in licensing route. That was the old SFC regime. We're going to go through a couple of years of pain because we see it as the bigger picture way to go. And the second thing they did was to diversify that. They said, well, we're going to market our system as a sort of a turnkey entree, so we can be SaaS for other exchanges that are setting up. And I think that was a smart move. And so guys like that, I think, are going to have a lot of leg in this business. They're going to have real longevity. It's tough first couple of years, but I think they're doing pretty well now.
Yeah, let's see what pans out. So, bringing back the focus locally, what are the steps that are most important for trading platforms here to take? What do they need to do? What are the initial steps? What can they do to get themselves ready to do business by the end of the year?
Yeah, I think, and I know we talked about this offline as well. I think that the first thing you do is find a really good consultant that has experience in the space, that has familiarity with SFC, that understands there are basically 3 different licenses you have to get now. There's type 1, type 7, and of course the crypto under AMLO, and that knows that process firsthand, that's worked with exchanges doing it. And then these guys will be able to guide you down that path. Now, they're not cheap and they're in very high demand right now. But that's thing one. And thing two is prepare yourself for at least 14 months, probably more realistically 24 months of runway, where you don't know exactly how things are going to go. And that means all of the basics. You must be domiciled locally. Your tech stack must be freestanding. It must be independent. Your keys have to be onshore. All of your storage, which was a contentious issue, it has to be onshore as well. So you have to have X percentage in your cold wallet versus X percentage in your hot wallet. Every single one of these things. And SFC, again, I'm going to put in a plug for them. They have done a tremendous job of summarizing the requirements with a series of links that you can just go to, and it will tell you exactly what to do. It'll give you the forms to fill out. It will give you an idea of what the requirements are, and so on. And they've made it as clear as possible that if you follow these processes and you satisfy these requirements, we will take a serious look at you. And that's something that level of clarity, again, I'm hard pressed to think of any other jurisdiction that has it. Going back to regional jurisdictions, I think in Japan, again, we'll cite that as Japan is still sort of forming the rules. I mean, they think by 2024, they'll have everything more or less complete. There are exchanges operating there now, some of whom have elected to pull out their global organization and restart with a local organization to get in sync with the rules. The same thing is true in Thailand, where I'm also very excited about the prospects there. And you can't ever count Singapore out. Singapore has done a tremendous job of, I would say they haven't been as clear by any stretch as some of the other regulators. And there's been a lot of uncertainty about the application process and just what does a guy have to do to get regulated around here, but they're on it. And they will have, in June, they will be releasing their results of their market consultation. Same thing for Thailand. Thailand will be releasing some new rules in June. So these guys are coming up the curve, but I'm going to tell you, I really think that SFC has led the way here regionally and set the strongest example.
Okay. Well, let's talk about the regulators. What do you see as the most important elements of the SFC's new regs?
Well, I mean, the general mandate of client protection was absolutely, that we come back to the big fuss is being made because it's providing an environment that's friendly to retail. And,
Market integrity is key.
Market integrity is key. That's where we live, and they've been very explicit about that. I can tell you the sections of the law of the VATP rules, 8.3 and 8.4, is right up our street. But they've been explicit. But other really important aspects, certainly the retail protections, the custody of coins, the definitions around those things. I think the supplying of financial statements. One thing that's been interesting in the world of crypto, when we've had some of these real events that have gone off, is that nobody knew what the market, nobody's seen the financials of these firms that have sort of suddenly gone up. And SFC is requiring you to file monthly. They want to understand your capital position. They want to understand your revenue. They want to understand everything about the financial workings of your firm. And they want you to have segregated funds that, in the bank that show us how much money you got to keep your firm, keep the lights on. And that, again, those explicit requirements, that level of clarity is what the market has really been looking for. It's what all the virtual asset players have been looking for. Regardless of whether they agree with the specific rules, it's the clarity that counts.
The city, again, has a reputation to maintain. And going back to our hedge fund regime, when people were saying back in 2006 to Alexa Lam at the SFC,
I remember
Singapore doesn't have as onerous a regime. And her point, she stood her ground and said, okay, well, then go to Singapore. And that was a position that served Hong Kong well with the crash of 2008, when, having stringent requirements and making sure, they're not a fly-by-night operation, was a huge protection. Then we talk about platform operators and what they need to be most mindful of when it comes to licensing requirements. I mean, your thoughts?
Locally, I can address that. I think Jonathan is in a better position to talk about it globally, but sure. I feel locally here, I'll go back to the fit and proper guidelines. I'll go back to the financial, representation of your platform, strong demonstration of you having proper procedures in place. And where we live in trade surveillance, we get asked most frequently, how do I go to the SFC and show them that I've got my stuff together? How do I demonstrate this? They're asking me to demo for them what I would do. And then we talk them through, Jonathan's actually got great documentation of this. First time I've ever seen documentation that good. I'm going to publicly give my colleague a boost, but it is they ask explicitly, okay, so you got an alert. What do? You talk to the client. Okay, fine. It happens again. It appears to be a pattern. Where do you escalate it? At what point do you involve your senior management? When do you tell your board? And when do you take it externally to the regulator? What do you do in order to make? You have to be able to talk to them as if you know exactly what you're doing, and you have to have a plan for every contingency. I once had the head of enforcement at the SFC tell me that the worst thing that you can do is drop a stack of procedures on the desk or drop the technical specifications on the desk of the licensing department or the enforcement people and say, this is what I do. You've got to be able to demonstrate it and show full fluency in the rules and in how your product works, how your tech stack and your infrastructure work to help you get in front of these things when a pattern forms. That's the most important thing. Demonstrate competence in compliance.
And for me, the most important thing is showing and demonstrating you understand your risk. And if we look at the FCA and we look at their fines, very rarely are fines for missing stores or suspicious transaction and order reports, so market abuse. It's very rare they'll issue a multi-million pound fine for not submitting a specific instance. What you find is that these multi-million pound fines, tens, sometimes hundreds of millions of pounds, are for not understanding your risk, for not doing adequate risk assessments, for not knowing the dangers that certain books might have, or certain desks might have, or certain products might have, and having sufficient surveillance processes in place or procedures, in our case, to deal with these potential risks. I think that's where firms fall short. And Vince is very kind to give me a shout out for the work I've done, but just off my own back to help out some friends and some firms. But having procedures that really detail both a risk assessment and how you deal with the end product of abuse or potential abuse is key.
You begin to understand why these guys are so expensive and so hard to find. You know, it's just sort of a truism that, as Jonathan said, you want a 30-year-old guy who can be maybe a director level, not quite ED, but he's got to have 20 years of experience, and he's got to sit in the hot seat. He's got to be able to defend his platform, not only internally to his management, but also to the regulator. And that's hard work. That requires.
I agree. I agree. It isn't necessarily the number of years under your belt. It's how you've used those years. I agree wholeheartedly. There are 25-year-olds way ahead of 45-year-olds in a given profession. No argument there.
Let's not start throwing numbers out there.
But having said that, when I look at, there's certain U.S. banks that I encountered when I got back to Hong Kong in 2006 after 20 years in the States, when I was looking around and I'm seeing 25, 27-year-olds, VP for compliance, institutional shall remain unnamed. I start to wonder what's going on, or are they just having, is it true that the market for compliance back then was just so hot? The market for AML professionals was so hot that they were having a hard time filling slots.
I think it's a bit of both. I think there will always be outliers. I'm one of my best friends who was one of my groomsmen at my wedding. He's the youngest colonel in the British Army. He made half colonel when he was early 30s. He's always got everything quicker than everybody else. The guy's absolutely fantastic at what he does. But not everyone does that. Not everyone's a colonel at 32, 33. But he was. And likewise, you'll find some people that might make VP at 27. Does everyone make VP at 27? No. Would you found the odd outlier? Maybe. And personally, I think it's a bit extreme, but there will always be people that work a bit harder, are super bright, and just pick things up really quickly. I don't think that's necessarily systemic of a broader issue
or a commander in the Royal Navy at 38 when the average is 43.
Yeah, exactly.
I would say I would add one sort of counterpoint to that, and that's as this industry has evolved, particularly in the last decade or 15 years, the level of technology that's come along has just begun to ramp up. The advent of applications of data science to compliance. If you look at an AML department in a big bank, there's 60, 70 people sitting there doing processes that they're struggling to automate. But they are. I mean, it's moving along. It's heading in that direction. And certainly in our area, the application in market surveillance, as high frequency trading took off, and that was a big part of what I used to do when I was on the other side. onboarding those clients and working with them and going from, a big client might have 1,000 trades today to a client having 10,000 trades in 5 minutes. And not exaggerating, a big options market maker, when the market is moving, he's shooting messages into the system. Like, we've seen them as high as 100,000 in a second. So that whole process evolved in the last several years, and watching the younger people who are more fluent in that type of technology have been trained in more of a STEM background than a business background or a legal background. Those are the younger guys, I think, that are really cutting some wood in this area right now. And I think that that's only going to continue. We see everybody talking these days. If I hear one more person tell me about, hey, did you see this new thing in AI? And it gets you crazy, but you have to think that all of these applications that are coming online right now, you either know it or you don't. You're either working on it or you're not. But if you're not, you're just not going to be a factor in 5 years.
I think
there's no shortage of charlatans, though, that in this space, that they know all the right buzzwords, and again, that they're able to make a comfortable living. You'll see them on the lecture circuit. You'll see them at all the industry events. They're at all the right panels.
I mean, I come from, as I mentioned, I was an English literature major in undergrad. Jonathan and I have had this discussion offline, and I decided at some point Shakespeare can't feed the kids, so
there is that,
an MBA, and then I moved on, and I always found myself kind of making up ground on my technical background, and I still, to this day, after a nice long career in that industry, and I'm taking classes right now. I've taken classes in data science. I'm taking classes in AI. By the way, that thing on Coursera that Andrew Yang does from Stanford, amazing. It's like, and it's not, and I tell my boss, I had a conversation with Jeff Bell, who's the president of the firm, the other day, and we were talking about another colleague of ours who is really, really focused on developing her skill set. She asked me, what course do I take to do this? And we were talking about learning command line things in Unix and so on. And I said, well, I took this one. But when I told Jeff about it, I said, she's taking it because she's going to use it every day. I took it so I could understand what you guys are talking about. That's, because I'm in that part of the business where I have to learn at least enough to keep up with what my clients and my engineers are talking about. I will never be a coder. My brain just doesn't work that way.
Learning is a lifelong process. And, you're secure enough in your career, I'd say, where you don't necessarily need it. But the fact that you're going to the effort to learn, kudos to you, because, we see this in the legal profession. There is so much technophobia.
Yeah.
I think this goes back to the difference between soft and hard skill sets. Yeah. So you're talking about charlatans or people that might not know as much as they can present. So they present a better face than perhaps is sitting up top.
But they're intuitive and they can figure out, generally speaking, what's being.
Yeah, no, I get you. I think this is what comes back to the soft and hard skill set. So with a hard skill set like Python or with machine learning, you can find people, going back to what we were talking about earlier, that reach VP at 27. Because you know what? If you can write really good code, you might not need to manage a team and have the great interpersonal. I'm not saying you couldn't have them, but you might not need those interpersonal skills if you've got these hard technical skills that are new, that are nascent, and hard to acquire. But if you have a job that requires you to interact with people, to understand your industry, to know how people work, you aren't going to make VP at 27, or you shouldn't be making VP at 27, because you've got to understand soft skills, how to interact with people, how to nurture a team, how to build a team. And I think you probably need both at an industry level to be successful. You would hope that people like me that get up and stand up on podiums have the intellectual acuity to back up what they're saying. You would really hope so. But I know what you mean. That can be a risk. They don't always do it. Sorry, I segued.
No, I think it's a point well made. It's interesting. Again, sort of, I know this is off the beaten track, but I consider a lot of what I do And I did when I was in banking, when I was a sales trader, when I was talking to hedge funds or central banks about different market strategies that were developed by people who were real gearheads. I mean, much smarter than I am. But you can't roll those guys out in front of a client most of the time, and a lot of the time. And so they need somebody who has taken the trouble to read the research, ask the questions, to go and explain it to the client in 4 minutes or less how it's going to help them make money. And and to this day, I do the same thing. And in this firm, this is what I do. I say that I think we have a lot of articulate people in the firm that really do understand the product better than I do, but they're not sitting here in Hong Kong where they have to talk to clients during the Asian day. So I'm trying my best to take what they develop and articulate as the firm strategy, as the product features and so on, and bring it to a client. And I know I used this phrase with Jonathan the other day. I always let imposter syndrome be my motivator, not my intimidator. If I feel like I don't know what I'm doing, it means I need to go back to the stacks and figure it out.
Temperament makes a difference. Certainly, that show Silicon Valley some years back, the dramedy, a black comedy,
Yep.
rankled a lot of people because the caricatures of the different personality types you will meet in that town, in that field, resonated with a great many people. They're like, yeah, more or less. I mean, there's a lot more truth to this show. And that's what irked a lot of the people that were being caricatured. Let's move on though. I mean, in terms of the new initiative, I mean, could it be seen that Hong Kong's staking out a leadership position globally when it comes to digital asset regulation, or is it too late? Is VARA in Dubai already taken that slot?
I think we're seeing several regions that are all working to a similar pace. I think those regions would be the Middle East. I think Hong Kong is definitely getting ahead of the curve as well, and Europe with MiCA. I think you've got some running a close second. I think the close second would be the UK. I think you may be looking at Singapore as well, a very, very, very close second. Maybe Japan as well, borderline. And then you've got those that are really lagging. And the regions that are lagging is essentially the US with regulation, fire enforcement. I don't think we need to go, you need to be a first mover to get all the cream. I don't think that's the way it's going to work. I think invariably there'll be firms that want to have a footprint in some locations for strategic reasons. So I don't think it's going to be VARA was implemented first, therefore everyone's going to be in Dubai. But I do think those that show there's an intent to lead and provide regulation and certainty will be the ones that get the investment over the next 3 to 4 years. But I don't think it's going to be a question of VARA was out first by a short period of time, relatively, so therefore they get all the business. I'd find that unlikely. But Vince, please let me know your thoughts.
Remember, we're not just talking about, when we look at this space, we're not just talking about trading in digital assets or cryptocurrencies or anything like that. We're talking about the broader investments in technology. And, and the technology that has evolved within this space is now being adopted wholesale within other parts of the traditional finance. I mean, the digitization process projects at places like BlackRock, for instance, and Goldman, and these are doing really well. JP Morgan with Onyx and so on. That's the real backstory. I think that when you look at at real investment in the space, that interests me at least as much in the longer term, perhaps more than the shorter term knock-on effects. The other thing I would have to say, and again, this is individual speculation, but I know that I am not alone in this thought, and we've been discussing this for a few years now, that this deliberate path that is being taken by the local regulator here in Hong Kong, it also harkens back to a period in history in China, not that long ago, when we went through a similar evolution with derivatives markets, with futures markets in particular, in the middle 90s, when they had a burgeoning, unregulated market in that, and then they had to shut it all down because of the risks that were being posed to the local population. Financial risks to them, and really a bad look, everywhere you went. And so Then they gradually reopened, and they did so in such a way that the business was, conduited through Hong Kong. They developed their local markets first by setting up the CFEX and then eventually some other exchanges. And then they said, okay, we understand this now. And now we're going to open it up to retail, and retail is going to be able to trade not only on our domestic exchanges, but also as in a conduit through Hong Kong. And I believe that you're seeing a much faster evolution along those same lines when you're talking about virtual assets here in Hong Kong. There's an enormous, in 2013, 2014, obviously China was the dominant player in digital assets. As much as 70% of the business took place there. So a single exchange was 30% of global volume. That's something that I think that's always been in the back of the mind of people who are here in Hong Kong watching this process evolve. And so that's where a good deal of the excitement comes from. There's still that crowd that wants to be first movers, that wants to get set up, that wants to be in position for whatever happens next in the coming year. But there's that more circumspect crowd that's content to, set up an office, study the process, slowly put together the business, and then launch when they're more confident that some of these prognostications are going to come true.
The methodical approach, but by that point, a lot of the low-hanging fruit's gone.
Yeah, you could almost argue that it's gone already. Remember, an important feature of the new rules here in Hong Kong is that they want you to focus on being an execution platform, a real exchange. They don't want you to focus on running a business as a prime broker. They don't want you to focus on the custody side of your business. They don't, these are all being diminished in terms of importance, and they're sort of being regulated away from that. So you're going to be if you want to be an exchange, be an exchange. In the US, the term that people use most commonly is ATS, where it's the same sort of setup. In Singapore, they're called RMOs, a registered market operator. That's what they want you to do. They don't want you to be a reservoir of client assets where you're earning a spread on everything the client gives you. You're prop trading against them. You're, all that sort of stuff. So that, that's the conservativeness of their approach. And it also, I think, sees the bigger picture that, at some point, there will be a larger flow. It will be allowed for it. But the important thing to the regulators here in Hong Kong, with, people watching over their shoulder, of course, is to get it right in the first instance, to make sure that it works properly before the next phase of the experiment can take place.
I'd like to come back to real quick before we move on to the Hong Kong-China dichotomy, where crypto is prohibited in China and permitted in Hong Kong. You spoke of convergence. Certainly when I was covering the regulatory beat for Thomson Reuters, the buzzword, the watchword of the last decade was harmonization in multiple areas of financial regulation, that markets move more smoothly globally when it's seamless. Markets move more efficiently when there's harmonization of rules. As we talk about convergence, should we expect harmonization?
I think the rules that we're looking at with VATP, with MiCA, with the HMT consultation paper, there's very little that is new in that we're still looking at trade surveillance. No one's going, well, there's a very specific form of trade surveillance and a very specific procedure you have to have for digital assets. It's not available for anything else. It's something very specific for what we're doing. Likewise with AML, no one's going, well, there's a very specific type of money laundering that's only happening with digital assets. It's not happening anywhere else. And yeah, I could get really, really, really technical and talk about nodes, talk about people controlling nodes and risk of potential insider dealing. Yes, there are nuances around this, but we could just turn it around and go, it's still insider dealing. You're still looking out for the same thing. Is it happening on an exchange? Is it happening off exchange? Where does the requirements to look at it lie? But I think when you look at exchanges themselves and what they need to monitor for, ultimately it's nothing new. Now, what might be different is the timings of regulations and how you get authorized and how you get regulated and how you're allowed to work in various jurisdictions. But the fundamental technological requirements, it comes back to Eventus and the fact that our platform is essentially agnostic when it comes to what assets you choose to trade, is because we can operate in multiple jurisdictions, we can operate with multiple asset classes. And that's because the rules are the rules. So I don't think we're going to see a huge amount of divergence, or there's a requirement to see divergence globally, personally.
You know what, that's absolutely correct. And I think on a parallel theme, actually two things. First of all, again, on the technical side, in the world of SaaS, there used to be a big push about a decade ago, a little bit more, towards straight through processing. I want to buy my entire front to back system from one provider because it provides the best flow through all the different aspects of my business. And big providers like SS&C and NASDAQ and people like that really did well in that era. And now the push in SaaS has been more towards modularization. I want the best product I want best in class in each aspect of the trade lifecycle and each aspect of compliance. And I want that product to be flexible enough to modularize into my existing tech stack without a lot of fuss. Ideally, the firm that you buy it from does that for you, which we do. The other aspect on convergence, and this is a little bit larger theme. I had the opportunity to talk to a couple of U.S. regulators at conferences, and one of the recurring themes with them is this idea of a clearinghouse for multiple exchanges engaged in the space, where it could provide fungibility between different exchanges. And at the same time, it provide all the things that clearinghouses were formed for, and that's investor protection of other members in the market, the ability to limit systemic impact of the failure of one particular member. And I think that in itself, where it may be a new wave coming within this world. I do speak to people who have interesting business models where they want you to be able to engage with the risk of crypto, in other words, the market risk, but have none of the operational risk, have none of the risk of or credit risk of a firm going down or falling apart, for one reason or another. And that's again happening, I think, in parallel to these other developments. Eventually, I feel strongly that there will be a point where there will be common clearinghouses, independent custodians. By the way, I have to say once again, these are my views, not those necessarily of Eventus, but it's something that I think will evolve in the space. I'm excited by like seeing things like DTCC clearing 100,000 trades a day. I mean, that's a tiny fraction of what they do, but doing that on distributed ledger, and I'm excited by the idea that Larry Fink and BlackRock have caught on to the fact that really tokenization is the way forward. It's going to decrease internal friction in our operational structure, and it's going to allow for us to be a much more efficient firm. And I'm seeing these things happening all over. So if you're talking about a convergence, I think you have to look at it not just in the world of crypto, not just in the world of crypto regulation, but look at it in the broader world of distributed ledger technology, and that's where it's really happening. All these themes, I think, are moving together. I get really passionate about this because I spend most of my waking hours, whether I'm here in the office or elsewhere, thinking about this stuff. And I really think after getting into this business right out of graduate school, going down to the floor of the Chicago Mercantile Exchange and watching these series of evolutions in the market. I mean, I remember the first Bloomberg screen coming on, like, oh no, we'll never be able to have an edge in bonds again, because everybody will have a common pricing model. Well, it didn't work that way. It helped us do more business. Then along comes Globex, the first of the, that little thing winking on the end of the desk. We were sure it was going to put us all out of business, that everybody would just have a Globex terminal. Well, that didn't happen either, because the structure of the markets wouldn't accommodate that. But then, when you look at crypto and digital and what's happened in the last 5 years, I'm just amazed. You're seeing these business models evolve that are going to change finance fundamentally forever. And it won't eliminate jobs. That's not the point. That's not the fear. There's a fear of that, I'm sure. But what it's going to do is make it so efficient that you're going to have these worlds converging and coming to, on the distributed ledger. I mean, I'm standing bet with the CEO of the firm that within 5 years, most of certain asset classes will be settled on the blockchain. It's just dinner at a Mexican restaurant, but
it's a bold proclamation. But crypto has done its part to bring the world together. Interestingly enough, same country, two separate jurisdictions, Hong Kong and China. Yet there's a dichotomy of regulation, and that they don't permit it, we do. So will we see greater instances of arbitrage in APAC because of that dichotomy between the mainland and the SAR? Your thoughts?
Regulatory arbitrage or trade?
Yeah. Do you expect regulatory arbitrage?
There are loopholes right now. Theoretically, because of the decree that was made in January of 2022, you remember the joint memo from the HKMA and the SFC that said these products are available to retail today. And what they were talking about was futures traded on a regulated exchange, or rather they call it an approved exchange. And then, of course, ETFs that were based on the indices that were based on these futures contracts, rather. And so if I'm sitting in Shenzhen and I have a futures account at my broker in Hong Kong, I could avail myself of that risk. So, that's a really kind of smaller corner of the market, but it's been technically true for a while. I don't know, we talked about a typology once before that you and I, where one of the things that really brought the Chinese regulators in to shut things down was this huge gap between the import and export figures in Hong Kong to China. And really what it was, much of it was fraudulent invoicing from a Hong Kong counterpart to a Chinese counterpart to allow them to move money out that they had, made trading crypto, and they wanted to get around Chinese capital controls. And so they would say they would bill somebody $1 million for $50,000 worth of goods and services, and that the rest of it would be, people laundering money. Now, it didn't just happen in crypto, but it happened to reach a peak in that era of 2013, 2014, before the crackdown. And so that was what really brought the regulators in to focus hard on, okay, the people are using crypto to evade capital controls. So going back to a regulatory arbitrage discussion, they are pretty tough if they catch you, bringing money out in shopping bags in cash, or if they catch you trying to get around the capital controls in any other way. So I don't see a regulatory arbitrage as a real problem, with China right now. It's something that happens. It will happen. But I think that it's something that's very aggressively enforced when they catch you.
Okay. If we look at the region, where are you seeing the biggest increases in client demand for crypto?
Interesting, and I'd love to hear Jonathan's thoughts on this too, but interestingly, I think some of the smaller economies with the old traditional argument that crypto will serve the underbanked, you see a big pickup in demand, for instance, in the Philippines. Thailand is doing very, very well. So some of the emerging economies are doing well. And this is in terms, when you're measuring it in terms of the participants as a percentage of the population. The number of participants who have engaged with crypto is growing most rapidly in those countries. When you see the absolute scale of transactions, I'd have to say Korea is interesting. They have the 4 internal exchanges. I'd say that Japan is interesting. Certainly Hong Kong, as the sort of entrepot China, and some of the other larger economies. But the most interesting to me are the smaller ones.
For me, Vince could probably speak with more knowledge than has done about which countries are trading more. But from my perspective, I think the countries you'll find and what you'll see in those countries that do trade more are one of a few things. A, people with disposable income. If you have disposable income, you have the opportunity to invest. 2, countries with cultural likenings for investing and taking high-risk investments. And 3, and perhaps I think that really reflects the use case of digital assets, countries that have high levels of inflation that want a secure place to have a store of wealth. I think you saw this a lot with Turkey. I know it's moving away from Asia, but you saw a huge amount of influx of funds into Turkey with the huge levels of inflation. And then you saw a clampdown on exchanges after this happened. Several were shut down, funds were seized, which was a little bit awkward for people there. I think that there's a huge use case for people in high-risk jurisdictions, not necessarily high risk like Iran, but high risk like Ukraine, high risk like Turkey, maybe some areas in the Middle East as well. Not Iran, obviously, we won't discuss that. But places where people want to be able to say, my funds are secure, I can move them internationally if I have a requirement to leave the country, and I'm not going to be hit by huge levels of inflation. So I think it depends upon the use case. I think some places in Asia, and Vince, tell me if I'm wrong, culturally might be more accepting of high levels of risk, to put it politely, and might be more willing to throw a few quid into a high risk investment. I think some areas in Europe might have high levels of disposable income that they're willing to invest a small proportion of their disposable assets into funds. And you've got higher risk jurisdictions where people want to secure assets in case of economic or political upheaval.
I think those cultural notes are important. And it is, there is a real speculative mentality. If you look at the traditional asset markets and you ask the CME, where has been their largest growth globally for the last decade? And they will point to China, Korea, places like that, where there's, a cultural acclamation to speculate. And that it isn't, I don't want to use the word gambling, because I think that's not what they're doing. You talk to I have great examples from clearing business out of Taiwan as a clearer on U.S. exchanges of business from the smaller second-tier brokers, and they're quite sophisticated in the way they trade. They're doing things that running programs that the average retail investor in the United States wouldn't even think about. So that's really what I mean when they have a more of a bent towards speculation. That they can be quite aggressive with that stuff, but you're right on the cultural stuff. I think that's important.
Culture makes a difference, and wanting to keep one's assets intact is important. A lot of the time, some places you can't trust the banking system. I get that, but by the same token, there are threats from technology, right? I mean, simply putting your Bitcoin on a flash drive and putting it in your back pocket isn't safe either. You can still be stolen from in a non-physical manner, if you get what I'm saying. I mean, so having your wallet literally be in your wallet is not 100% foolproof.
I would agree. I would say nothing is 100% foolproof. I mean, I could get hit by a car, and my wife would not know where my seed phrase is kept.
Exactly. People forget their passwords. Yeah.
There are risks, but likewise, you know what? You find people having their accounts hacked. They get a phone call from their bank, and they need to reset their password. And you find people giving away individual bits of information that allow them to be hacked. And you find that there is a risk associated with pretty much every technology and pretty much every way of storing funds. I would say that the ability to keep all your information on a flash drive that you put in the safe with a seed phrase that only you could remember, or a seed phrase that kept in your safe as well, is secure. And the only risk of exposure is you. I would prefer a technology and an environment where the risk is not outside of my control, but is within my own control. And if it goes wrong on my head, not somebody else's. And there are subtleties in this. I mean, you found the 3 commas hack as well, and people had funds extracted from their APIs or via their APIs. So you can find risks, but ultimately, as someone like Jesse Powell had a Kraken, not take your money off exchange, put it in your wallet if that's what matters to you, because when it's in your wallet, it's safe and it's yours. And if it goes wrong, it's on your head. It's not on the exchanges, it's not on your technology, it's on you. So put your money in your wallet, keep it safe, hodl.
I think that having that level of security is fantastic, but it's not for the average investor. And it's one of these things that we keep running into. When people get excited about going global, taking this, to every investor, making it available to everyone around the world. And that's great, but there are nuances to it, like the security feature that make it harder. I mean, I've had people tell me, "Oh yeah, AML is, or, excuse me, this is the future, that it's going to happen. Everything is going to work this way. We're going to have, but it just isn't practical. I mean, I can't imagine my parents, as they were aging, having to go through what I typically go through when I engage with the market in this space, and
multiple passwords, multiple usernames, multiple logins.
Yeah, well, I mean, a new generation is coming along that probably doesn't consider it any big deal, but that's a new generation, and that means it's another 20 years before this becomes, commonplace.
Cybersecurity quandary. What's the most frequently asked question you receive from clients in relation to the SFC?
Oh, gosh, I mean, I think apart from the general question is, can you help us with our application process? Which, again, we do just by practical advice. And we can do, thanks to Jonathan and some of the work he's doing, we certainly get a lot more into the weeds on that. But I think that apart from that, it's people want to speculate on, on how long the process is going to take, who's going to get approved, how many approvals in the first year, that sort of thing. And you hear people saying, I've heard a rumor it's only going to be 10 in the first year. And I'm like, well, where'd you hear that? And you find out that he heard it from somebody who heard it from somebody who heard it from him. So it kind of boomeranged around back. And that there's just that kind of speculation. A friend at another firm, Angela over at Angela on at TRM, said that and I hope I get this right. She feels that the expectations in the market need to be rationalized with where the regulator really is, and we'll see. But she said her algebra equation was happiness equals expectations minus reality, and so I think that she's probably right. The expectations right now are pretty high, pretty bullish, and we'll see how that pans out. That nobody really wants to believe during crypto winter or whatever we're going to call this, and during what has certainly turned out to be a lull in VC funding, and things. Nobody really wants to believe that this is a home run. It's all over. It's going to be a new bull market. Everything's going to be great. But people in the back of their mind are rooting for that.
Good point. Do you foresee, do you envisage further regulation as being needed as retail investors continue to trickle into place?
Yeah, they punted on derivatives, which I think we mentioned before, that's one of the things that they knew that they would get a lot of interest, and they asked us in the consultation paper, they asked all of us to say, well, what would be the business model that you would propose for derivatives? And they received some very thoughtful responses. I think that regulation for derivatives is coming. I think that the ability to deploy leverage, at least that would put it on par with what they can get currently at CME, which is modest. It ranges between 50% and 60%, depending on the level of the price of the contract. I think that they're looking for more coins. I think they did a good job of clarifying how to get new listings out there in terms to expand the universe of coins that'll be qualified for trading. But they will continue to clarify those three things, I think, in the next wave. And they'll also be watching closely to see how these retail investor protections are deployed. And a lot of it revolves around qualifying somebody by saying, here's a knowledge test. What do you know about trading crypto? And getting crypto retail sort of up to speed. And they're going to want to watch that process carefully too before they refine that piece of the legislation or the rules, rather.
Okay. And in the time we've got left, is there anything you feel we didn't cover anything you'd like to spotlight, showcase, leave our viewers and listeners with a lasting impression of? Any advice for young people seeking to enter this cutting edge, burgeoning next generation field?
I'd be more interested in hearing.
Clearly learning is an ongoing goal. I mean, it's a lifelong task. I mean, I'm glad you're taking courses, because I know a 67-year-old that's just taking up Python. He's an MD at a bank, and he's taking up Python. He's learning Python just because, as you said, he wants to know what the techies are talking about.
Yeah, I've been a hiring manager. I built out a team of over a dozen people before. So I think it goes back to what I said earlier, that either have experience, and if you've got experience, you might not be at that nascent stage yet, or two other things. Show real enthusiasm. I mean, genuine enthusiasm. Show that you research the company that you're applying for. Show that you're excited about what they're doing. Understand their mission statement. I've given people jobs, not necessarily because they were the best people I interviewed in terms of technical skill sets. I gave one person a job because A, she was very personable and nice on the interview. B, she created a slideshow for me. She even got Kraken's company colors, the ones we have for our logos, and used them as the background on the slide. It was super professional, really slick. She did her research. She was so invested in the process that I went, I'm going to give this person a chance. And she was fantastic, really, really, really good. I've given people jobs because they chased me and went, Jonathan, I'm really excited. Thank you for interviewing me. I found you on LinkedIn. What advice can you give me about how I can interview better? What were the gaps that I had? Can you give me any feedback? And yeah, you might be able to give that feedback via company policies directly, but it shows you that people are excited and want it. So I'm getting excited about this. I love hiring, but show you want it, understand your industry, and show absolute passion for mission statements. Really, really, really do, because you're not just joining a company, especially now in this industry. Most companies are quite small. I mean, the biggest is your Binance, your Coinbase, your Kraken, and even they're only a few thousand, which is relatively
small. They have a preference. This is known by many recruiters. Binance has a preference for hiring young. You might say that's true of all professions and all players in this field. But Binance in particular, they really like to hire young. They don't like to hire people in their 30s and 40s, because the prevailing culture is that of youth when you go to their offices. I mean, it's a little like that movie where De Niro shows up as he's a retiree, and he shows up as an intern at a Google-esque company with and Anne Hathaway is technically his boss. He's answering to her. She's a supervisor. And it's that. I mean, it's almost anachronistic. A man out of place.
Yeah. Well, I think, going back to something that Jonathan has said, and something that it's a really strong belief of mine, that if you have a passion for what you do, you'll eventually be good at it. And it's the pursuit of that goal. And this is what so many people sort of, when you show up with a really stacked resume, that's great. You have these skills, but what are you going to do next? And what do you really want to do? And how do you want to do it? And I think finding people with a genuine passion to learn more, to do more, and to just be better than they were yesterday, those are the people that succeed. Whether you're in banking or you're in digital or whatever, I really believe that.
I think just
being able to show how you can transition your skills into the new milieu and how you can apply them and what you can do for them accordingly. But I'm sorry, Jonathan, please go on.
Yeah, sure. Just to use a like a buzz phrase I've always just created. No one hires a resume, you hire a person.
Yeah.
Always. You hire the person. The resume might get you in the door, so you get that interview, but no one hires a resume. You hire the person behind it. So you've got to be personable. You've got to show interest, and I think showing interest, and Vince and I are saying the same thing over and over and over, will get you over that hurdle. And if it doesn't, you're unfortunate, but just apply again. Show you want to. I mean, there are people at Kraken that interviewed under me, failed at the final hurdle, and went, you know what, we loved the company, we loved how you interviewed me. I'm going to apply for another job at Kraken, and hopefully I get that. And the guy did. And he went, "Thank you, Jonathan, for giving me that insight, helping me through the process. Sorry I couldn't work with you, but I'm really grateful I'm here." Pick yourself up, try again, just go for it. Really, really, really try. Try hard.
Absolutely. As a former boss of mine used to say, vision trumps resumes any day. You know, so gentlemen, thank you for a delightful chat. We must do it again. I learned a lot. And to our viewers and listeners, thank you again. Until next time.